What a week. Well, we have a lot to go over in Saturday's deep dive. For those that are new, welcome. As always, subscribe, click all notifications. Let's get to it. Saturdays are deep dives, so we get into the big topics on the week, and then we cover them and then figure out the action plan for going into next week. And then the daily videos will carry through for those other events. Let's get to it. So I want to start with the beginning here, because obviously we have to talk about Venezuela and how to profit from that and what's going on with non-farm payrolls. But we'd be remiss if we just don't talk about the basics. If you look at the SPY, it's very clear. I'm not going to spend a lot of time on it going, look, we hit all-time highs. We hit all-time highs. 690 was the call wall. You're over it. It's very clear, even though it's not done yet. I have to wait for all the other data to come in. But the new wall, your new area, is going to have a 7 handle with it. And we can all see that that's where it's going. I think that the diversification and what I'm going to explain today is going to explain why the SPY is probably the area to look versus just outright looking at the Qs that are struggling here. Why we're seeing diversification in the IWM, we're going to get into today. But you are seeing massive diversification into this area, and there's a reason for it. And one of those reasons is space, drones, and we're going to cover why and what's going on geopolitically. So when you look at this, that's the very clear winner. We did this trade as a swing. We haven't had a day to worry about it. Like literally, they're always the best trades, right? You never have to worry about it. Like TNA just broke out. This is the 3X Bull ETF for those that are just saying, how do I just play small caps? You should do what you're comfortable with. I think we got in this like 48 or 49. I don't have it in front of me right now. But you're breaking out, and there's very little to say about it. You might want to watch the doji and then make sure that you flip the doji, beforehand. And then if not, if it breaks below the doji, you may get a shot at a pullback. You never know. Life's like a box of chocolates lately. And, it's 2026 and we were 9 days in, and I didn't have a lot of this on my bingo card. I don't know about you guys, but I also want to comment on a couple things before we go further, because I really have to cover a lot of these topics. We really have to dive into non-farm in Venezuela, because that's where the money is going to be made. I mean, it's very clear, and I don't think people truly get the ramifications. I got asked when it happened why I didn't cover a video or do a video on it right away. Because it's not that simple. You have to get into all the inner workings. You have to understand all the connections, and we'll do that today. But gold, for example, yeah, that's a no-brainer that people are going to want to buy gold. They're going to want to buy silver. That's probably not going to stop now. I think it's super interesting that you had a huge rebalance in the silver futures market where they cut their ties from 9 to 4% because of the restrictions there. And you can look that up yourself. And it didn't go down. So the question becomes, man, if that's not going to take it down, what is? And I think with what the geopolitical uncertainty that you have going on out there, boy, I don't know that that's the thing. I think that when we look at that, you kind of have to think that they're probably going to ramp this stuff up. So when we look at this, like gold, copper, I don't see it changing. Now, what I think is really interesting, if you take a look at the gold miners, like if we look at relativism, and I think I'm going to cover this topic a little bit today, but if we look at gold, right, let's drop this to a line for a second, and we look at relativism. And I think you should look at relativism because it does tell you where you should put your money. One thing people always say to me is at the end of this, oh, I have a small account. Where should I put my money? It really doesn't matter the size of the account, right? What matters is the process. Every time you're putting money and you're putting chips on the board, it's cost benefit analysis. It's not, is this going to go up? Is this worth my money? And is it going to, outperform other things that are worth my money? And if you start thinking about it that way, it's very different. So if I look at gold versus the SPY here, I can't get over this level yet. It doesn't mean that I'm not going to get over that level, but right now you're just back to where you were a decade ago. That's all. It's not a big deal. It doesn't mean it can't go, but that's where you're at. I just want to cover some of these so that you can look at some of this relativism before we go any further. So here's GDX divided by the SPY. And what's GDX? And I'm glad you asked. GDX is the miners. So if we look at the miners and we do the same exact thing, do we get the same result or do we get a different result? And in this situation, we would just mark the tops right here and we would see that, okay, maybe we're getting over. And then we just do the simple thing of dropping a VWAP there. And then we would see that we're right on that. So for me, it would be an understanding that GDX probably flips ahead of this, and GDX probably flips ahead of the SPY. So you might want to look at the miners, but that also could take you into other miners. I'm glad you asked. So then you would look at the XME, which is going to be, just so you guys know, metals and mining. So then instead of just looking at gold miners, we're going to look at metals and mining and say, okay, what do we have going on there? I think this is where it gets super interesting because you're all the way up to this level before you even have to worry about any resistance. Now watch this peak here. That's going to take you right to here, but watch when we do this. But wait, there's more. So watch when we go here and I'm going to open this one up, and I just want to drop this line down for a second. So when we look at this from a comparative analysis standpoint, let me get the top of that. You're going to notice something. Up, down, over. XME is already hitting what? Lows, higher low, higher low. When we go and take a look at something like GDX, for just example, yeah, you're doing some of that, but you know what you're not doing? You're not hitting higher highs at all. So there's a difference there in what you're seeing with the XME SPY versus seeing outside of that. So this would take you into other areas. And so then what you would do from there is saying, if I want to be in this space, you might start looking at names like, Alcoa that are in the XME, or CDE that are in there, right? Or HL, right? Those kinds of names. Wow. Or you might want to look at, FCX. Meanwhile, everyone's talking about gold. All right. So I think that that's really important to get index sector stock. That's how I trade. You should do what you're comfortable with. But I really want to get this out because it's super important to get this concept, because what a lot of people will do is they'll tie themselves to it. So like if I go, for example, and I look at like EW, like here, I'll show you what I mean by this. So if I go look at EWP and I'll be like, man, Spain's on fire. And then you just go, all right, well, is it worth getting involved in Spain versus the S&P, and drop this to a weekly and go and take a look at this and go, really? Like, do I really want to do that? Like, is it really worth that level of diversification? Or if I take a look at Italy doing the same thing, is it really worth that level of diversification right now? Maybe we get there, maybe not. But this is showing very clearly that even though we might feel that way, are we really getting any more benefit than buying the S&P? And that makes life a lot easier. It's just like looking at, ITA versus, the S&P. And then if you look at that and you see what's going on in that specific sector, you might see these breaks and go, well, that's definitely going to make more sense than buying the SPY, right? And then what are we doing here? Index sector stock, right? Index sector stock. But someone like yourself might look at this and then say, well, I want to compare that to the SOX. And you might say, well, the SOX is clearly better, and it is right now, than that. But you can always see those rotations. So what you're doing is you're taking this relativism on top of the macro and the fundamentals that are going on in the world, and then you're overlaying the whole thing and saying, where has the better chance to outperform? Again, it's a function of your money and the cost-benefit analysis, right? Do you stick with the status quo and buy tech? Or do you look at this and say, geez, I really got to see what's going on with, defend right now because of what's going on in the world. And then you look at something like defend that's breaking out, and maybe you would overlay that with the SPY on a weekly, and you'd see a move like this and go, boy, I don't really know why I'm not looking at defend and those names there. The two biggest events on the week, before we go any further, are non-farm payrolls. Completely misunderstood, in my opinion, on just what is really going on there. And what Venezuela, I got asked to cover it. I saved it for the Saturday deep dive because there's a lot to cover and there's a lot of interconnectivity here. So let's get to it. So I get comments a lot about why don't you cover things when they happen, specifically Venezuela, which we're going to dive into. I don't try to cover them quickly. I try to cover them in depth so people can see what the issues are. And that's what Saturday's deep dive does. The two biggest events on the week that we're going to cover, just so we can get an overlay of the land, are the non-farm payrolls number and Venezuela. So let's jump to it. The very first thing that you'll note about the unemployment data that came out is you're at a 4.4 versus a 4.5, and previously we were at a 4.6. We're going to dive into these numbers in some detail here in a second. The average earnings year over year is 3.8 versus the forecast of 3.6. So what this means is that wages are actually going up year over year, and people on the unemployment overall that are in the workforce, the unemployment rate is dropping. Where this gets super interesting is that non-farm payrolls are 50 versus 70. And when we get into this detail, it's very interesting. So what we really have here is we have an environment of low hiring and low firing. Now, if we look at this, and this is just ripped from the headline, and I'm going to get more into this in a sec, but I think it's important to just note you have this gap in here. So what would have happened into this gap? We have no idea. We truly have no idea where this would have gone. Would we have seen a 4.7, a 4.8, and then seen it come back down? People say, oh, that wouldn't have happened. We have no idea what this data that we missed out on for these 2 months looks like. What we do know is that the trajectory now is down, but we don't know if that other month would have been up here. Just by looking at the graph, you would assume that it would be lifting, but as always, never assume. We are on this little trajectory down right now, but what we have is what we have. So we have to look at this and say we really only have 1 month of data like this that is pointing down. Now, what I've done here is I just screenshotted all this data after putting it out there and laying it out so that you could just see it on one sheet very simply, and then we'll dive into this in some more detail. But if we look over at this, October revisions are down by 68. So we went from 105 to 173. November's down by 8, from 64 to 56. These 2-month revisions in the non-farm payrolls that everyone kind of glanced over puts us in a situation here of losing 76,000 jobs. The 3-month average on these revisions puts us into negative territory. So why we're seeing this bright number of unemployment actually dropping, if you look at the numbers and what they're doing with these revisions, it's actually much worse than people think it is. Some of those that you just saw, some of that data is actually in the BLS.gov. So if you go and type in BLS.gov and type in non-farm payrolls, you'll actually be able to find the document it's like 48 pages, and you can go through it yourself. The average work week for employees edged down, which I thought was super interesting because we just saw wages go up. But they're telling employees to go home a little sooner, right? We don't need you. We're going to cut our costs. You can go home. Manufacturing work week edged down by 0.2. Same thing on the manufacturing side. They're not increasing. They're decreasing. The change in non-farm payrolls was revised down, as we recently just stated. And I think that this is a much larger issue. Monthly revisions from additional reports received from businesses and government agencies since last published from the recalculation of seasonal factors. Now, whether that's the case or not the case, nevertheless, that's what they're stating. What I think is super interesting is that if we look here, November is really the first downtick that we've seen. It's the first one in change. So if we look at the first published versus revised numbers, you're going to see something. They revised November down for the first time in the year. And then, of course, besides that, you have the December number that was down. So we went from a 4.6 and they revised that to a 4.5, and then this number came in lower than expected. But if we take a look at what's been going on with January from 4 to this 4.6, or even if we go through the revisions of 4 to 4.5, that's an 11% increase in unemployment. So no matter how you look at it, employment, hands down, is creeping up. So to bottom line this, you have employment that is creeping up, and maybe it's slowing down, but on the site, if we take a look at the non-farm, you're at a negative number. Period. End of story. So the idea that there should not be more rate cuts is kind of delusional at this point. Now, we can argue about how many we'll see, and we can do that in another video. But I think for this video, it's important to understand that the labor market is clearly pointing to that it needs help. Now, unless you've been living under a rock, we've all seen this photo. We all know exactly what's going on with Venezuela, and we all know what's happened there. Let's get to what is actually going to be affected by that and why this is so significant. And I think there's no better way to do that than to use their own document to show you what exactly is going on. So this is from energy.gov. This is on January 7th, and the fact sheet. President Trump is restoring prosperity, safety, and security to the United States and to Venezuela. And I think that this is really important just to read this headline: safety and security to the United States and Venezuela. Because a lot of people don't understand what was actually happening in Venezuela, how it was affecting the United States. I really don't care about your political beliefs, so you don't really have to leave comments on it. What we're trying to figure out here is what's going to move based upon what's going on. And there's a lot of geopolitical risk here on this movement. We're going to dive into it. Now, this is from the Department of Energy and how they see it. And I think it's really important to get the framework on how the administration sees what's going on there so that we understand what is this path. And then it's important for us to understand how other people around the world are looking at this and who got absolutely, for lack of a better term, hosed by this. So if we look at what they're saying on this historic U.S.-Venezuela energy deal to safeguard America. All right, and of course, we're going to get the rhetoric, so let's just deal with it. But if we look at the security of the United States and Venezuela, does this actually help the United States? Yes, it hands down it does. And there's a lot of reasons for that. And we'll get into some of it. But Venezuela was once a wealthy state. We don't have to go through its rich history. We all know that you have a lot of people that have left Venezuela because of the regime. We all know that there's been an outstanding grand jury indictment against Maduro for a very long period of time under both administrations. So we're aware of all this. We're aware of everything that's going on there. What we need to focus on is what does this do and how does it affect it? And instead of getting into all this and their justification, agree, don't care. President Trump announced an energy deal to strengthen the national security in the Western Hemisphere, restore Venezuela as a responsible, prosperous ally of the United States. And I think this one line is really the crux of it. And I think that that's what you should focus on. Venezuela was not an ally any longer. And they're in, as we all know, Latin America. So it's very close to home. They're not an ally. It was very clear that they were not an ally. And it was very clear that other nation states were actually utilizing this at the detriment to the United States. These are just facts, right? And you can go and look into these facts if you like. But what we're here to do is determine how are stocks going to move, how are indexes going to move, how's the bond market going to move on this, how's oil going to move on this. That's what we do here. And that's why Saturdays are a deep dive. So I really like the idea of doing the Saturday deep dives. And then when we're doing the Wednesday strength reports, I've gotten great feedback on that. As always, your comments on this are greatly appreciated because that's how I create the content. So keep it up. Right, and Department working with the Venezuelan authorities to provide private industry to execute this deal. Yeah, of course they are. Now, I think there's a couple things in this part of it, and this is on the Department of Energy website, energy.gov. You can go and pull the entire document yourself. It's much longer than this, but I'm trying to get the pieces that are important. United States government marketing crude, global marketplace for the benefit of the United States and Venezuela and our allies. We've engaged world-leading commodity market makers and key banks to provide financial support for these crude oil. All right, I'll jump ahead a little bit here. Marketers and key banks. So Venezuela wanted to be in BRICS. BRICS, the only reason they're not in BRICS is because Brazil vetoed it. That's the only reason that they're not a BRICS member. And that's really important here because what was happening was the de-dollarization. The de-dollarization of oil. That was the move. If they got Venezuela, who has more oil reserves than anybody else, which a lot of people aren't aware of, it's a problem for the de-dollarization of oil. And if you go back to how oil was tied to the dollar with Saudi Arabia, we can do a whole thing on that. But understand that there's a lot more here than this. And there's a lot of reasons for this move despite what people are thinking. All proceeds of the sale of crude and oil products were first settled in U.S.-controlled accounts at globally recognized banks to guarantee the legitimacy and integrity. Do you think those banks are going to be trading through SWIFT, or do you think they're going to be trading through BRICS? You think that oil is going to be converted into dollars, or do you think it's going to be converted into the yuan? Right? When you start understanding what's really going on here, it's super important because this is how we can profit from it. And that's what we're here to do. We're here to understand these moving parts, right? We're not here for any other reason. So there are other ramifications of all this. I'm not saying that, but understand what this channel and what we're trying to do with our community. These funds will be distributed to the benefit of the American people and Venezuelan people. Government oil sales begin immediately. 30 to 50 million barrels. There's an entire market out there, and you'll see this when we start getting into this and some of the stock charts we're going to go over. There's a whole black market of ships out there. I had no idea how deep it actually was till I started getting in there. And we've all seen the headlines out there. The U.S. is selectively rolling back sanctions to enable the transport and sale of Venezuelan oil and crude products in global markets, consistent with the law that will flow Venezuela, mix upgrade, optimization, significant modernization, expansion. Significant modernization, expansion, and upgrading requirement. Anybody want to guess who does that? We'll just get into some of these names right now. Halliburton, Schlumberger, Baker Hughes. They all do modernization, expansion, and upgrade the equipment. And the U.S. is going to authorize the import of selected oil field equipment. I wonder who that will be. Services to immediately offset decades of production. This is a long game. This is not a short game, guys. What's going on here? This is decades. This is literally decades of this. This will involve technology, et cetera, et cetera. Really important to understand that the grid's completely dilapidated, poor mismanagement, and then, of course, some more jabs. Now, when this happened, how are people looking at it? Dispatch. The U.S. just captured Maduro. What's next for Venezuela and the region? Then we all get this photo of him in his special Nike outfit. A lot of people aren't getting this part of it, and it's really important for us to understand this, that the relationships with Venezuela that were between China and Russia. Russia and China were actually on the phone with him hours before this happened. Not days, literally hours. And there's a couple articles here that actually get to it, and we should talk about that. But the success of this operation creates a once-in-a-generation lifetime opportunity for Washington to secure private strategic alliance. Right. The issue here is, did we want Russia and China in our backyard? The answer is unequivocally no. The other thing that people don't realize about this is the amount of money that Venezuela sends to someone like Cuba. Now, the article goes on to say this operation sends a signal to Beijing and Moscow. And I really think that there's more to this and why it was done. what we're seeing here is the outline of the national security strategies officially in effect. Chinese People Liberation Army is reported to be wargaming combat operations in the Western Hemisphere, and a new official Chinese strategy for Latin America refused to recognize the region as a special significance to U.S. security. Washington has demonstrated a long overdue commitment to this hemispheric sector. I think this is very important for people to get, that China, what they tend to do is they put these loans on countries that cannot afford to pay them back. And then they seize those reserves, or they seize those assets as payment. This is not rhetoric. You can look that part of that up yourself. I'm not going to go down that rabbit hole, but it's very clear and it's been documented for decades. China condemns U.S. strike in Venezuela hours after diplomat met with Maduro. It's literally hours after they met with them. The capture of Venezuela president is a surprise overnight raid, brings abrupt end to Beijing's effort to support the embattled regime. Here's a picture of China, Venezuela. They're all hanging out. Everyone's all smiles, having a good time. How did China respond? China strongly condemned the overnight U.S. strike on Venezuela and the capture of President Maduro, calling the action deeply shocking, serious violation of international law. The attack came hours after a Chinese special envoy met with the Venezuelan leader to reaffirm support for the imperial regime. PRC may attempt to distance itself from Venezuela economically. Well, it's too late for that, if it perceives that the U.S. military will create significant risk to Beijing's relationship with Caracas. Clearly, it's going to. Bloomberg reported January 5th, PRC has requested its banks to monitor credit risk associated with Venezuela. Their lending exposure to Venezuela was approximately $10 billion. That's still owed to China. And this ties us into Taiwan's Trump's administration's capture of Maduro. Some fear that China will be emboldened by the new norms set by the United States, increasing its appetite to target Taiwan and carry out decapitation strike targeting Taiwan's political leadership. I would argue that it's very different in those kinds of situations. And the reason that it's different is because you had an outstanding on Maduro in a court, and that's why he was actually brought to New York. We can all get into this and go down the rhetoric hole, but there's a very huge difference here. Now, whether China sees it that way or not remains to be seen. And I want to show how China's looking at this. So if we look at a China website and you see how this is going on, how will China respond to Maduro's capture? So what China is showing their population is very different than what the U.S. is being showing their population. Here's a picture of Maduro, and then all of a sudden looks like there's thousands of people in the street that obviously want him back, and they've got the flags and the photo of him. Very different here than what we're seeing in the U.S. Now let's talk about what this does to the world. Now, as we stated, crude oil is definitely going to be something that we have to look at here. And I want to stick on the theme of relativism, because I think that that's really important. So if we look at crude oil, you're not upticking, you're not really downticking. We're seeing some movement to it, but are you seeing this huge up or down kind of movement? Not really, no. This will take time. And so when we understand that this takes time, we have to think about, hey, how do you play this? I think that this stuff's super simple to an extent. So if I look at something like crude, for example, and let's go here and pull up crude here. And then what we'll do after we pull this up, and should be able to do it this way, and then just put the little thing here, and then we'll go ES. And we'll drop that down, and let's see if that'll work for us. And it will. So what we're doing is we're doing relativism. We're comparing crude oil to the S&P futures market, and we'll be able to get that kind of look here and see, is this something that we should look at and say, we need to get involved in crude versus the S&P, right? So one of the themes I really want to start tying into these videos is, where do you put your money? So like, I don't care if you have, people say things to me all the time like, oh, if you have a small account, give me small account strategies, or give me, how do I get from 25 to 100, or how do I get from 5 to 25, or how do I get to 100 to a million? Whatever it is, it's all process, guys. It's not looking at the number, right? It's constant process, and that's what gets you there. You can have the goal and everything else, but it's the process. And so it becomes down to cost benefit analysis. Does it make sense to put money into this vehicle or another vehicle, right? It's really that simple. And if you think about it that way, like, yeah, this might go higher, but does that make sense for me to do it? For example, you hear a lot of people talking about XLF. And so if you look at XLF, we're going to go down this rabbit hole just for a minute. If I look at XLF, people are like, man, XLF's breaking out. And, I really got to get involved in financials. And then you go XLF divided by the SPY. And then we go and take a look at this on a weekly basis. And then we drill out on that. Is that something where I need to be putting a ton of capital? Right? Why do I want to underperform for the past 2.5 decades? Right? So you have to look at things on a relative basis. Now, I'm not saying that let's say there's something in financials that you're really interested in. All right, we're going to go a little further. You can pull out a name and then compare the name, right? And it doesn't mean you have to buy the sector, but there might be a stock in there. Now, I'm just going to go down this rabbit hole because I bit it off so here we go. So like when you look at something like JP Morgan, you would say, well, JP Morgan's clearly setting up to outperform. And the answer is, yeah, the performance of JP Morgan versus the S&P is at an all-time high. So if you ever were looking at it, that would make sense. You could do it with Goldman too, right? And go, all right, well, what's Goldman doing versus the SPY? And then you would see this and go, okay, well, we're breaking out. And you could even do simple things where you would drop a VWAP on this. Stay with me, don't go to the light. So what you're seeing here is like, oh yeah, we're definitely setting up to break. And you got 40 percentage points, or you got just outperformance since then, right? From when it flipped that level. So there's a time to use VWAP, and you got to make sure you know when. But anyway, so yes, you could do it that way. But what makes more sense? To find those names or to start with index sector stock, right? So in other words, instead of doing it that way, the way that I do it, but you should do what you're comfortable with, is I might go, well, stocks divided by the SPY, and go, okay, so let me get this straight. Not only are some of these names outperforming, but the SOX versus the SPY is hitting all-time highs. So do I want to buy the sector and the stock that are hitting all-time highs, or do I want to just buy the stock that is, right? So you're making these decisions. So let's get back to crude, and then we'll go from there. But really important, and I wanted to tie that in somehow, so there it is. And you can cut that out and watch it again if you want, or go back to that. But that's super important to get that part right there, because that shows you how you should figure out where you're actually putting your money. So if we look at crude, we can see that we're not really seeing anything there, right? We're not seeing those moves. We go and take a look at the names that I went over when we looked at the data and said, well, where should the money go? Well, no one has this figured out yet. Like nobody has these numbers figured out as to what's going to happen. I think that there's a couple basic things that you could figure out, that they're going to have to modernize this. And who's ever in power now down there, very simply, is going to want to stay in power. And you have some other things that are going on in Latin America that we're going to address. And this is why Saturdays are deep dives. So if we look at something like a Halliburton, we'd have to tie that together and say, well, clearly that's getting ready to break out here. Maybe it is Schlumberger. Now, when we look at these names, I'm not putting in a lot of the lines right now or anything like that, but you can see where some of these areas would be and what you would be doing. You could drop in your 12, your 22, and your 55, but they're not really adding a tremendous amount of value. What you're trying to do here from a standpoint of reflexivity is look at this and say to yourself, where's this thing in a year? Where's this thing in 2 years? Are they getting more business or less business? Like if you don't go nuts down the rabbit hole and just go like, are they going to get more business or less business because of this? Well, they're going to get more business, right? So from this peak in 23, you can see that you're clearly over that. If we go back to some of these other levels like 14, you can just kind of drop it like it's hot up here as well. And this is going to just tie all together, as you can see in a sec here. But here's your peak. Go to the weekly and just make sure that that's the peak. Yep, and that is the mother of dragons of all peaks. And you could say, okay, so when do I really want to get involved? Well, you're over that little guy, but up here is 47. And if you got over this, you probably really want to pay attention to it, right? Like if you really started flipping this, yeah, that's great. That's good. But if you can start flipping, your peak, well, that's the bee's knees, as a lot of these cool kids like to say, right? That's the one you want to pay attention to. And then you just go down the list, and then you could also look at Baker Hughes and go from there and see how that's going. And of course, these are all tied into the OIH, which is oil services, which is doing well. But if we took OIH again and we looked at it in regards to the SPY, and then we went out on a weekly basis, what are we going to say? So do we have to rush into this? Not really, but it's silly to not be aware of this. And then if you start to see these things break out, it might make sense for those people that are looking at more diversification, saying, I want to get away from tech. I want to start looking at this stuff. And I think that that's a really important way to do it. But wait, there's more. You'd have to look at the region as itself. So if you look at the region, and I think that this makes a lot of sense to look at it, you'd have to say, all right, well, Venezuela's stock, that went through the roof, Venezuela's stock market. And I just want to show people what's going on there so that people can kind of get what's happening. So this is Venezuela GDP. And you can see that, Venezuela GDP back in the day was 400 billion. And now you're at 111 billion. And this is one of those things everybody always does, where they'll pull up Poland next to it and say, well, one went through the form of, socialism and a narco-terrorist state, and the other one went through capitalism, and look at the difference, right? It's really not that hard to see, but there's a reason why I'm showing this. Stay with me. Look how exports in Venezuela dropped off. What do you think is going to happen to Venezuelan exports now? Do you think they're going to export more oil, or do you think they're not going to export more oil and natural goods. So clearly they're going to do that, right? And the current administration is going to make a big push on that. We're going through this for a reason. Were they allowing goods into the country? Okay, so then you would look here and you would say, well, that peaked to $20 billion of goods were being imported. And now you're down to 3. What people aren't looking at is the way that this will expand. So you're actually going to get to a point, and I'm not going to say that, oh, it's going to be like a Berlin Wall, but it's going to open up the entire region. And that's what people need to start thinking about. And if you're Chevron, for example, who lost billions of dollars in Venezuela, billions, and now they have the ability to get it back. I thought this was absolutely crazy that it actually went back to its own level. And we're seeing a lot of this with the algos lately. They're just bidding everything up. Let them bid everything up and then just wait for it to come back. It's almost like a game at this point, how poorly they're doing. But anyway, if you see how this is holding that level, you're looking at this going, does this look like the stock's trading at an opportunistic level for this? Or if you look at something like an Exxon and how this came all the way back down before bouncing, the Trump administration wants these guys to go spend billions of dollars down there again. Ask them how that went last time. Not so good. So are you going to feel like you want to do that? No. But what you might do is you might start putting dollars into other areas in the region. And this is where I think it gets super interesting. So you look at something like Argentina, for example, and you go, oh, okay, what's going on there? Oh, well, he's got the highest approval rating he's ever had at 60%. Right. So the U.S. lent, I think it was $20 billion that they got back, and they got paid for it. I remember when Bassett did this, and I was like, gosh, this move is sickly brilliant. People were like, oh, it's not brilliant. He's going to lose all our money, blah, 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 blah. Yeah, he got paid back with interest already, and you have complete stabilization of Argentina. But, what do I know? So the point that I'm getting at here is, where's that money going to go? Do you think it's going to go into Argentinian banks, or you think they're going to be like, hey, I know we have to have money in the region. Can we put it in Argentina where you guys already have a foothold, or do we have to put it in Venezuela and take a shot here? I'm sure there'll be some give there. So then when you start thinking about that, like, geez, who would they flood with money? Oh, I don't know, like BBAR. That's interesting. That's starting to break out. BMA, right? That's setting up to break out. GGAL. Okay, these are setting up, right? So then you start thinking about it that way and going, all right, well, all that money is going to have to go somewhere, because they're going to have money down there that they can convert into the local currency, and they're going to want to establish a base there, right, and establish dominance in the area. I think it spreads, and I think that that's what's going to happen here. So when we think about that spreading, the other thing that's coming up in this area, and I could spend a lot more time on this, but if you look at something like YPF, and people are like, well, YPF, yeah, you're not really doing too well. Oh, okay. So then we go back in the day, back here, right? And then all of a sudden, yay, freedom. And then boom, and they had the little Braveheart moment. Here we go. All right, so what does this mean, and why do we care about it? Colombia's got an election coming up in 3 months. And a lot of people don't know this. This is Colombia, and this is the Colombian National Energy Company. So if you're the Colombian president right now, and you're watching what's going on, there's a reason why these guys are doing what they're doing right now and saying, hey, we want to work with you. Yeah, I bet you do. Right? And you're seeing this rhetoric coming out of Mexico as well. And I think that that's very important to get. But something like this, when you start looking at this energy company, if there's a change in leadership or a change in strategy there that pulls China away, that pulls Russia away, which is very clear where this is all going. So in other words, if Latin America was tying themselves to Russia and to China, let me be real clear about this, where my position is on this. That is not happening anymore, because people are just basically looking, going, oh my gosh, did you see what happened to that guy? Yeah, I don't want that to happen to me. And if you think that, oh, that can't happen, if someone had this on their bingo card, the 72 hours into 2026, nobody. They were there in 3 minutes, they grabbed them, and that was it. And I'm not saying it for any other reason, but that's what happened. So if you think that they can't do this and exert influence, and this wasn't done for other reasons, I do think that you need to open your mind up a little bit on that. This is done to stabilize Latin America in favor of the U.S. Whether you agree with that or not is irrelevant, but that's why this was done. So if we look at who those players are, I would think it'd be Argentina. I think they would benefit greatly. I would also look at the countries that are saying something about this versus with the rhetoric versus the countries that are not saying a lot. Now, we can all go down the rabbit hole with the other stuff, but I think it's really important to get this. I don't think anybody benefits more than having stabilization in the region than Argentina. I really don't, because they already have the foothold. And that's where my head goes with this. You then have to tie it back and go, well, what about something like China? Well, what's going on in China? And if we look at the A shares, for example, and I like looking at the A shares more because this is mainland and how mainland trades, you can't look at this and think that there's anything wrong here, right? Because look at this ramping up and the growth that's ramping up. And then you'd have to extrapolate this all out. Well, why would China be ramping up and why would their GDP go up? And then why would the US GDP go up, which it's clearly going up? And then you have the statement by Trump and he comes out and says, I want my dream military. Well, why do you think you want your dream military? Why do you think that you just increased the budget on your military from 1 trillion to 1.5 trillion? These numbers are absolutely insane, right? And you can't get a pothole fixed. Anyway, was that out loud? But if you take a look at this and how this is playing around, right? That's moving higher. Now, stay with me. Now, China's been increasing their budget for 7% for the last 3 years. And I don't know that people really understand this. When we look at what the US is doing before this, it has not been at this path, right? And that's really important for people to get. It has not been at this massive increase. Is our budget bigger? It's insanely bigger, insanely bigger. And I don't want to denigrate that it's not insane. It is. And I'm sure there's tons of, waste, fraud, and abuse, all those keywords that we all say nowadays. But they're ramping up. China's ramping up. Now, I'm not saying anything's going to happen from this, but there's a couple things that I think you have to tie this all together with. Now, if we look at the A shares here and we look at what's going on there, and we can go look at this, we can all go and look at this stuff, right? We can look at the BABAs of the world. And, I'm actually still short this. Been shorted for months. You look at the BidU. I actually like this trade with the IPO with the AI semiconductor, but it already faded, so I just blew it out. But is that where we should go with this? I don't think so. I think that you have to look at this completely differently. I would think that part of what the administration is actually thinking of doing with this is if they ramp up their spending, China has to ramp up their spending. This reminds me a lot of what we've seen what happened with Russia, where you get into a war where you're just outspending them. And you keep outspending them, and it drives them deeper into debt. And I do think there may be some of that in a calculation here. So who benefits? EUAD benefits. There's a reason why EUAD has absolutely exploded from 42 to 47. Now, when we talked about this back at 30, back here, right, when this thing was out, and then Trump was saying that, the UN has to spend more money or NATO has to spend more money, and everyone's like, no. Well, there's a couple things now. One, the Greenland rhetoric and turning up the Greenland rhetoric, for whatever reason, it is what it is. But they're going to want to increase their budget in Europe as well. So when you start outlaying this stuff and you start overlooking at it, like EUAD in Europe, and you start looking at, there's a lot of companies out there like Leonardo, right? Let's start there. Let's do it this way. So if you look at something like Leonardo, and this is a company that's based in Italy, and you can go look into it all for yourself, but you start looking at these companies and the moves that they've had. Well, all of a sudden, who can sell to China, who can't sell to China? Start understanding those mechanisms because they're going to ramp up their military. There's no doubt about it. Europe is going to ramp up their military over this. The US is going to ramp up their military over this. And so when you start understanding where this is going, whether or not it's done for any other reason than to, let's just say it's done to increase China's spending, right? To drive them deeper into debt. Very well could be the case. There could be some of that's out there. Let's take a look at the fact that China just lost, $10 billion with their investment. And that's probably nothing to them, really. But what they're doing in Venezuela, that foothold's gone. Their foothold in Latin America is gone. So now, whether they want to be in a retreative stance in Latin America, they don't have a choice. So why would we see something like this actually go higher? Because all of a sudden, they're going to have to ramp up their GDP. Because they're going to increase the amount of money that they're investing in defense. Whether it's defense through AI, defense through drones, no matter what it is, they're going to have to ramp up. And when they ramp up their GDP, the earnings are going to go up. So things like when we look at something like a FXI and that large caps aren't going higher, it is what it is. They're going to wind up ramping it up. It's just a matter of time. I tend to avoid it because of the volatility associated with it, but I think it's very realistic to assume that this goes higher. I also think it's realistic for us to assume that things like defend, and when we're seeing these moves, I don't think that I think some of this stuff is so unequivocally calculated, and I'm just going to leave it at that. But if you take a look at something like a Lockheed, for example, and we look at the week, does that solidify what happened? No, what solidifies what happens was, I'm going to tell everybody that you're no longer allowed to have dividends and you have to hire people. and then I'm going to increase your budget by 50%. So this is classic flim flam that we've seen out of this admin. They shake, it's the old shake and bake. And so all of a sudden everyone panics, they sell, and then they just rips higher on the real news. We have seen this over and over again. I don't care how you feel about it. You keep seeing it. So where does this put us, and what do we do about this? You have to realize that defense names are going higher. They just are going to wind up grinding here. So when we look at something like defend and we see this grinding, we might want to go back and say defend versus SPY and say, does this make sense? Well, here's defense versus SPY. Remember how we did that relativism earlier, and we said this is how we're going to determine what names to look at, and then you see something like this? Does that make sense that maybe we want to start looking at defense names, considering how they're outperforming the SPY, and they've been for the past, 5 years now, right? So then this would become something that would be super interesting. Of course, you had this enormous drop, but let's just go to the peak and see what happens here. I love when we can do stuff together. And you can see how we rallied up, came all the way back down to that area in December, and then boom, now we're pushing. So you could look at this a couple different ways. Another way to look at this would just be to take the peak and drop an anchored profile there and see once you flipped, you have nothing but blue skies above. So there's a lot of room here. And then we could also extrapolate this out with saying like, well, what about's going on with the drone names and the space names? And then you see those completely breaking out here as well. So you could do something like UFO and then take a look at that into the SPY and see the outperformance there. And then again, you're doing the same tests over and over again and go, oh, from the peak, UFO versus the SPY, we're above it. That's interesting. We got over it, we failed, we got over it again, and here we go. So then looking at the names that are in UFO, there's even Jedi, which is drone and modern warfare, and that trades as well. And you can look at that one and go, this is a newer one, obviously, but oh, you're at all-time highs. So all of a sudden going through these, in a sense, you understand where we're going with all this. And this is why I couldn't do this video in 5-10 minutes when it hits with Venezuela. That's why Saturdays are deep dives. You have to look at who's pulling the threads here and where all this is going, right? If you're taking a long-term stance on all this stuff, you have to look at where this is going. And this is going towards increased spending, right? Golden Dome, all of that. So when people are looking at names like ASTF, you can see how these things are setting up, and they're setting up to push. Now, do I think that this is going to continue? I think it's hard to see how it doesn't, and I'll leave it at that. Like, I really think it's very difficult to see how this doesn't. And I think you have to go through the names and try to do your own due diligence. We can get more specific in the strength report we'll do on Wednesday. So that's why I said that you might want to subscribe, click on notifications. Also, I purposely don't run mid-roll ads on these. So if you can share the videos, that would be great, because the algo won't pick it up as much, because I don't do mid-roll ads, because I think it's really exhausting when you're watching something. So when you share it, it actually makes up for that with me through the algo. The algorithm actually picks up if the video is shared or not. So please continue to share these videos with people via social media or just your buddies at the water cooler. They still have water coolers, right? But you see things like KTOS, like these names automatically do what? What do they have? They have inroads already. They already have inroads. And we're seeing these names like AVAV that are continuing to push. This stuff's it's just not going to stop. It might rotate. It might change that we're not going to do the aircraft carrier anymore, even though it still seems we're going to do those too. But now we're going to do like a swarm of drones or whatever. And then that ties you to names like PLTR and makes you wonder, like, why are you not ripping? Like, what, you're not going to see any of this? Or is it just working off that valuation, right? Left head, right shoulder. And again, it goes to go to where the money's going. And the money, hands down, is going into the drone stock. It is unequivocal to see that that's what's happening. So when we see those kinds of names, we just want to play with them. You don't want to not be in those names, and there's so many of these names out there. Like someone was showing me this one today, Carmen, and it's just like there's just so many of these. The long trade for me with this kind of stuff is things like SATS. This is something that we bought at 80, actually, when it became very clear that the valuation of SpaceX, they own the biggest percentage of SpaceX, if you are wondering. If you think SpaceX is not going to be tied to this, you're crazy. They're definitely going to be tied to it. So, just by sitting with it, 40 points. And a couple of things I really want to go over, but you have to do your due diligence on this. I'll cover some more in the strength report. And I want to cover this topic on Monday, but I'd be really remiss if I don't touch base on it before Monday morning. When we're seeing names like SanDisk, and they're doing things like this, where they are breaking out, pulling back, breaking out. And again, I'm just going to touch on the topic, and then we'll probably cover the topic more on Monday, if all things are equal. But if I look at something here, and I'm just going to use their RSI, not mine, but you're at $27 on an ATR, meaning you should move $27, 14 up, 13 down, 27 up, 0. There's like a 67% chance that that's what's going to happen every single day. And instead, what you're getting is you're getting this move up. Now, this is a huge move up, right? 75 points, 3 times the ATR. Okay, you get an inside bar. The next move here down is 60 points. 50 is straight down. So when you see this, and people aren't getting this, I don't think they're truly understanding this. When you're seeing this kind of stuff where you're opening at like 362 and then in an hour you're at 310, nobody's holding this kind of stuff. And if they are, they're delusional, right? There's old traders and there's bold traders, but there's not old bold traders, as the saying goes. So, and there's a reason for that. Like, oh, I know I'm down 20% in that trade, but memory. Like, okay, dude. Like, none of this works that way. So if you can't spend time being active with trading these names where you're trading a core position, like maybe you're holding a core and you have a trading position around it. So you're like, no, I'm going to hold my core up here, which might be like 50% of the position. And then when it gets washed out, does something that, makes you think it might stop. You get into the trading position takes out all-time highs, you blow it out, you wait for it to pull back again, and you're doing that. So you're constantly pulling money out of it. I should do a video on this because it's a really important topic to trade these things. You don't know when this ends. And I'm not saying that this is ending anytime soon. What I'm saying is that when you see that level of volatility, if you don't change the way that you're doing things, you're one day away from this. Like, you're literally one day away from where you're just down 100 points and you're wondering, oh, it's got to come back. And then it never does. And I'm not saying that day is Monday or Tuesday, but it's definitely going to happen as it's happened throughout history, right? Nothing is ever new, right? It's just a replication of things that have happened before through fear and greed. So when you look at names like Micron, yes, we had great trades in this in the community for those that are listening to this. We absolutely killed it on that day trade. On this swing trade, we're already up, 22 points. So, we absolutely crushed it. That's great. And I've already scaled out of portions of this because of the way the market's acting on the tech side. You just need to be aware of the environment and then change the way that you're trading according to the environment. And one tool that you can use, and I would strongly suggest that you start looking at that, is the ATR, because that will tell you where the volatility is. The VIX being at 14 is not reflective of the volatility that you're dealing with right now. And that's really important to get. Thank you very much. That is it.